Good evening, ladies and gentlemen. The stock market is continuing to rip up to the upside. Don't be one of those people doubling down if you're shorting, letting the price get away from you. On today's Stock Market Brief Show, we want to talk about whether or not this is a bull trap taking place. We have timestamps in the description below. We're going to go over many things, stocks. We're going to go over some crypto. We're going to go over some signal charts and so much more. Let's go ahead and get into it. All right, people, welcome back. If you haven't done so already, make sure to hit that thumbs up. It's greatly appreciated. That's how you sponsor today's episode. We're going to start looking at the 11 sectors that make up the SP 500. Over on the right-hand side, you'll notice that utilities, once again, is the standout sector. Yeah, real estate was up, but utilities continues to be one of the top performing sectors from an absolute perspective and a relative strength perspective there as well. VIX was down slightly, and the S&P 500 finished up about 0.5%. Now, while the market continues to rip up, it is interesting to note that the SPY, this is from JP Morgan, SPY and Q's U.S. equity short interest is imploding, getting to lows that we haven't seen for multiple years. And while this is taking place, you can look at something like the volatility of volatility, and you can see that, well, hedging activity, I mean, people aren't really reaching for hedges right now as this completely implodes in on itself too as well. Volatility index as well is coming in. It's roughly at around 12.5. It's at 12.69%. And when you look at that from a yearly, monthly, weekly, but we'll focus on daily basis, what's that turn into as far as implied volatility for the S&P 500? It's basically telling us we can see about a point, so 76 basis point move up, 76 basis point move down. That is based off of implied volatility. Now, another interesting aspect to look at is back month versus front month volatility. And sometimes when this yellow line reaches up to 0.20, which means back 3-month volatility versus front month, 1-month volatility, or the VIX, I should say, is 20% higher. And sometimes when we reach into those areas, the market has in the past found tops or started periods of consolidation. The last time we were up at these levels was right around here, and that's where we actually came into the April high, where we had that 6% correction, and now we're shooting back up and into around that area with still room to go. If we take a look at the 11 sectors that make up the S&P 500 from an absolute basis, there's a couple that I want to call out that are getting tight. So one of them is obviously discretionary. Right here, you can see it's butting its head. So potentially look for a breakout here. But if we start breaking down the low, be careful. Communication services is also trying to break out of this little tight pattern here, consolidation. And then we have technology as well getting very, very tight here. So a breakdown may put pressure on the markets because, well, technology is one of the larger components to the S&P 500, but we're floating roughly right around that 50-day XLI, which we'll get into the 15-minute chart momentarily. This thing closed at the highs of the day, almost and around that 126, which I believe is the all-time high there, if I remember correctly. XLB continues to break out of its wedge pattern. That was one of the trade ideas. If you're in the Patreon group, you saw that, and we saw some follow through today. So it's always worth noting to update your risk. Energy saw a nice move today. So we've been focusing on energy stocks, still within this kind of channel pattern. So we'll see here if we can break out and head higher. And the consumer staples, one of the risk off assets, just like utilities over here, continue to see strength. So this is why we might be thinking it could potentially be a bull trap, because we do see a big flow into risk off type assets. XLV over here is breaking out of that 142, closed at the high of day, but it's pulling into that declining moving average there as it stands. Financials also continues to catch a bid, moving to the upside. And then XLRE is one of the more weaker ones as it's kind of flagging here, but we did see some strength today coming from some, I guess, pretty extended levels from selling off. Okay, a couple other ones I want to call out is semiconductors. That was not on that list, and semiconductors is getting very tight right here as well. They did not perform with the market today, but you can see it is getting tight, so a breakdown may cause some problems. However, we can always watch for a potential breakout of the high of the prior trading day. You have that MACD that's curling over, you have volume drying up, you have price action very tight. Like we might be in for a move in the very near future. Another one to keep an eye on would be biotech. Biotech saw a nice break out of this trend line, And now we had 1, 2, 3, 4 days of consolidation, pulling back and getting pretty tight here these last couple of days with the MACD starting to curl up. So if we start breaking above the high of the prior trading day, maybe that gives us some more momentum to come try to tag that swing high. Now, going into tomorrow's trading session, which is the final day of the week, we have Michigan consumer sentiment. We have some Fed speak here too as well, a couple of reports. Okay, so we have some macro data that could cause some volatility. I'm going to go ahead and share with you something that I share with the Discord group every single day. That's one of the many benefits. If you want to check it out, there's a comment or pinned, there's a link in the pinned comment or the description. These are the daily expected moves going into tomorrow's trading session. So look at the SPY. We're looking at roughly at a plus or minus $2.32 move, which means it gives us the upper level, the lower level, and we even include the 2 sigma levels because sometimes we break these levels, okay? So if you want to screenshot this and put those lines on your chart to see how they work, do so. Let's go into some indices. We're going to start off looking at the S&P 500. The S&P 500 is not too far from its all-time high, and we're getting past that 5,200 level. Now, this is getting into some interesting territory. From a 15-minute perspective, you can see that we're above that rising 5-day moving average, and price action has been holding this lower trend line here. And you can see if price goes up a little bit higher, we may still have that negative divergence that's building. So be aware, we still have one there on the price momentum oscillator too. So if price were to come off, perhaps we come to this volume node, which is roughly about 517, and that could be a potential buy the dip opportunity. If it starts breaking down further from there, well, we have this volume shelf way down here, 506 or 507, so that could be one to watch as well. But as it stands, the market pressed pretty significantly high, and we're operating on with some negative divergences that are currently in the works. And on top of all of that, we are trading outside of the weekly expected move. The month-to-day anchored VWAP is still trending up, and we're well above that, so much so that if you actually look at the monthly chart, it is just an inside trading month, but we're already tagged, and it's the 9th day of the month, the upper monthly expected move, which I believe was 52.20 and some change. Now, as that's taking place too, we want to look at gamma. This was the 5,200 call wall. It still remains the call wall as we're trading outside of that level. Okay, not by a crazy amount, but we closed at 52.14, so 14 points above it. And as we're above there, that's a positive sign to start seeing traders reach out further to say 52.50 and 5,300. Now, if we get back below that level, okay, there's not much to stop us from sinking off. So you want to hold that 5,200 or potentially get pinned around that area until our next option expiration. If we take a look here at that specific chart, 5,200 is the level of support to potentially watch going into tomorrow. If we start to pull back into this level, not only was it prior resistance, right? Prior resistance can potentially become support, but it is that local area of support going into tomorrow's trading session, okay, and the call wall. And then we have 52.25, which will be the local resistance. And then if traders want to keep on pressing higher and higher, 52.50 would be that initial target. Let's go ahead and look at the NDX. This is the NASDAQ 100. We talked about XLK. Well, I just want to point out that the NASDAQ 100, right, is also getting very tight. Volumes contracting. Price action's getting tight here. So if we break down under that 18,000, I mean, watch out. We could potentially start expanding to the downside. On the flip side of that, perhaps if we break to the upside, we can go retest those swing highs. If you take a look at the 15-minute chart, price action is getting very tight here, as you can see. And we do have that negative divergence that's currently in the works. So as price is moving higher above a rising 5-day moving average, there are some divergences that are building. So just be careful if we start breaking out to the upside, that if the divergences hold, it could be a bull trap where we come in and consolidate a little bit more. Same thing goes with the NASDAQ composite, price action getting very tight, and on the 15-minute time frame there too as well, above that rising 5-day moving average. I'm not going to spend too much time on that specific one because it looks just like the NASDAQ and the Qs. Okay, a Dow Jones Industrial Average did break out of this tight contraction pattern, and this thing has been on a monster tear too. If you look at the 15-minute time frame, this thing is getting burnt to a crisp over here. So no, I would not initiate new longs in this area as the RSI on the 15-minute time frame is getting rather overextended. What I would look for is consolidations and pullbacks in the near future. As you can see, we still have those negative divergences that are currently in the works. IWM, the Russell 2000, saw some strength today, up about 1%. on some okay more than the prior couple of trading days. If we look at the 15-minute time frame, this one was called out in the swing trading community. In the community tab, I posted this as this little thing was flagging. Well, we flagged and we broke out from that to come test this swing high. There are negative divergences that are forming. We are above a rising 5-day moving average, but this one looked to be pretty good in seeing that digestion, where some of the other ones, we didn't quite get that type of digestion earlier in the trading session. If we take a look at commodities, let's look at oil first. Oil saw a little bit of a move up today, and it's kind of following this tight contraction pattern that we talked about on the other trading video that we did. I think it was yesterday's trading video, so we're getting some follow through from this outside trading day. We'll see if it continues to the upside. Remember, if oil starts moving up, this could be an indication that we might see the 10-year yield follow in the near future. The 10-year yield actually backed off quite a bit today. We did have a 30-year bond auction, and the bond market liked what it saw and like what it's doing there. But a question kind of arises where, is it going to be a potential flight to safety if we start to see things like TLT move? But we'll pull up that chart actually in a little bit here. So oil started to rise here, and this one started to back off. So if oil continues to rise, does this mean that we might see 10-year yield turn back around, start heading higher, and start taking out the bonds once again? Take a look at gold. Gold is trying to break out of this tight contraction pattern. Silver made a big move today, breaking out of its consolidation pattern over here too as well on some good volume. And then copper is in a contraction pattern. So we're seeing safety assets, right, and inflationary assets. So safety assets are starting to break out. We're seeing inflationary assets like copper start to contract a little bit here. So if this breaks out further, maybe that puts pressure on inflation data. And then also oil, right? This is coming off, so that may help a little bit in the meantime. But if we start to rise back up in the price of oil, that could go right back to where we had some problems with the inflation reports as well. Now, I want to look at Bitcoin really quick, and you can see Bitcoin, it's actually not too bad looking, right? I'm looking at these lower highs, right? And that's not the greatest look, but 64,000 seems to be a pretty interesting level, as we had a resistance, held a support, and then it's been backing off here. So if we start breaking above the high, that could be a potential good sign. And, you know, one way you can look at this is potentially just like this, and we're kind of coming back into that trend. That would be a positive sign. Ethereum also is getting very tight here. Yeah, once we come into these trends, we see pretty explosive moves to the downside, but yet we test it more and more. Perhaps we tighten up for an eventual break. What we haven't seen yet is the Sailor to Shift tool flip positive yet. So it's still on its official sell signal, sell trigger, but we did start to turn back up. So that's a good sign as it stands for the bulls, but we haven't got that official sell signal, buy signal and buy trigger. Let's take a look at some bonds and yields. The inverted yield curve remains inverted. It's like 466 bars or days that it's been inverted. So quite some time in an inversion. There will come a time where this uninverts, and we've seen in the past when it uninverts and when the rates start to get cut, it's typically not that great for the markets, but the anticipation and lead up to that point has been pretty good. If we take a look now at the TLT and XLU, this one where I was kind of interested in as far as bonds go, right? Bonds haven't made this large move, but if you look at the correlation between utilities, which utilities is a risk-off type of sector, they have been moving like crazy. And if you just look back, a year or so, you can look at the correlation for 30 days. It remains the majority of the time in positive correlation. And right now, we've been seeing, a decent amount of time in negative correlation. So chances are, obviously, this is going to become more positively correlated, as there's not really a correlation as it stands. But does that mean utilities is going to come in? Or does that mean we're going to see potentially a flight to safety in bonds where the yields do come off? But perhaps, we've seen times, right? You typically think where yields come off, that's good for markets. But if TLT or bond proxies are used as a flight to safety, that could be a potential dangerous thing. And utilities, right, are kind of signaling that as it stands. So this is all reasons why potentially this move that we're seeing could very well be a bull trap. But it's nothing that you want to just get aggressively short on at the moment, because there are still things like rising 5-day moving averages. And on top of that, we are in positive gamma territory above the flip line. All right, smart money versus dumb money. Last time we talked about this was when SPY was making a lower low and smart money up here was making a higher low. And that, well, what did it lead to? A nice little bounce. So why am I bringing it up now? Well, HYG had a high over here. SPY had a low over here, and it's starting to move up. And then you can see that's a higher, obviously, in this short term, higher high. HYG is not confirming that as it stands as the market's been ripping. So is smart money signaling to us that we may potentially pull in on the SPY in the near future? Now, that could be a potential, but remember, this can negate itself by breaking out higher. So you always want to pay attention to see if HYG, like say come tomorrow, if SPY starts moving up but HYG is getting clipped and going down, that could be indication that smart money is telling us that the SPY may sell off in the very near future or start to consolidate. Let's take a look at a couple indicators now. As the market's pressing higher, we are about 1% away from the all-time high. I did want to call out that there's not the greatest looking breadth from the percent of stocks above the 50-day and 200-day moving averages, right? We started to see an uptick here, but if you look at the all-time high, which we were right over here, if I just draw a line down, you can see we're roughly in this area. And actually, if you draw back a line from this point over to here, we had a high point, right? Then we had a lower high in breadth as the market pressed higher, and it actually led to a little bit of a sell-off. Now, as this is recovering a little bit, we're pretty much almost, at that all-time high. We're pretty far off as far as the percent of stocks above the 50-day moving average. And the very same situation is kind of happening here in the 200-day moving average. And if I look over here at the NASDAQ 100, you can see this is also not too far from its all-time highs, but take a look at the percent of stocks above the 50-day moving average for the NASDAQ 100. This thing is coming off hard and fast, and this is just kind of seeing a recovery. And the same thing goes with the 200-day here too as well. So as this has been making lower lows, right, and then this and price action started, obviously was going higher, then we started to see some volatility, and we haven't really seen a large recovery here while the market's starting to recoup there in the near future as well. If we take a look at the percent of stocks above the 20-day moving average, when the market was selling off, we talked about oversold conditions in all of these markets, right? So the Dow Jones, SP500, 1500, the 500, right? They were all getting pretty extended to the downside, meaning the percent of stocks above the 20 was becoming far and few between. Okay, now what do we see happening? Well, we're starting to see them rise pretty aggressively, not into crazy overbought conditions, right? But they are heading north into that direction. The last chart I want to close off with is the Old Fool indicator, and this is where we take the NASDAQ composite and we divide it into the put to call ratio and apply some moving averages. And we look for the green line to cross above the blue line, or the blue line to cross, the green line to cross beneath the blue line. And as the market's starting to bounce here, I just wanted to call out, we did have that official or sell signal right over here. And that's when we started kind of chopping around sideways. We had, little whipsaws here. We saw the market sell off. It gave us some insight, but it still hasn't really changed too much. And we're still technically on that sell signal. So maybe perhaps this may start crossing over in the near future and this starts moving higher. Or is it giving us insight like it did over here, where we did have that bearish sell signal, and then the market even rallied pretty significantly like it did here. Now, albeit this started trending and had a nice spread going lower, giving us insight. So it's not quite as strong as a look. This isn't as quite as strong as the prior look there. But nevertheless, it is still interesting to see this data and price actions coiling up. So I think it makes sense for, you're long breaking out of this if you missed it, right? But you just, manage risk. But if we start breaking below this tight little contraction, watch out. We can go through a little bit longer of a period of consolidation. That's all I got for you on today's episode, everybody. Hope it gives you some insights into the market to see what it is that I'm seeing. See you later.